Capital. At GK Capital, Mr. Ian Prasad, Chairman, 138 Student Living, Mr. Cranston Yuan, Chief Executive Officer of 138 Student Living. We also have with us quite a few members, the GK Capital team, 138 SL team, I see Jane Fund Managers here as well, and there are some other persons on the way. So, for everyone online, thank you as well. Thank you for your patience. Mr. John Lee, who is a director of 138SL and one of the founders of the entity, is online and ready to go. So I'm going to hand over virtually to John and ask him to tell us a lot about, well, quite a bit about the 138SL story. And I'm sure that will fuel further dialogue with the passage of time. So thank you again for your patience, ladies and gentlemen, and let's get going. John, over to you.
Brian, good. Thank you. Good morning, everyone. I also apologize for the late start. So I've been tasked this morning to talk to you about the company, the background, and the brand. So I want to start by pointing out that although 138SL, as we refer to it, started in 2014, the idea of student housing, and this is whether on or off campus, took form from as far back as 2008, when K Limited, which was the original holding company, started construction of studios on Wellington Drive in Mona. And this is within a stone throw from the Mona campus. We realized then that we had a wealthy student market willing to pay up to $1,000 per month for decent, and probably the most important part, a private door, ensuite, secured environment. And I emphasize private door because up until then, people were literally living in a dorm. So we offered them the opportunity of living next to their friends, but having their own private space. So having seen that, and with my background being formerly of PwC, and most of my time was spent structuring concession agreements around the two toll highways we have. And I take no responsibility from the tolls that you pay. But so we use the concession agreement principle as the foundation for our commencement of discussions with UE. From that discussion, we lasted about a year from start to the ink being dried on the page. We were able to structure an agreement with what I see as 4 important legs. The first leg, and the most valuable as far as I'm concerned, is a guarantee to take up 90% of available rooms. That 90%, if we were to have to call on it, it's above our break-even position. And that's after servicing debt. I do not think that this has been achieved previously, nor do students' accommodation providers in Europe and North America enjoy such a significant risk mitigating feature. The majority of student housing are off campus, probably 95% are off campus, and they have to create their own demand. Whereas we are on campus, and there's a 90% guarantee. The second leg is a stable pricing mechanism. So the rates we charge are denominated in US dollars. And each year, we simply adjust it for the US inflation rate. This to me is important in achieving a real rate of return. The annual adjustment, I must point out, is not discretionary. It is captured in a formula, and we simply refer to the US economy inflation rate. The third one, which is linked to the second, is that we are allowed 15% real rate of return. So it's not a nominal rate, it's not being eroded by inflation, it is a real rate of return. And the final one, although implicit, as we all know, our taxes and the rest of the Caribbean goes toward keeping UWI afloat. So implicit in this agreement is a guarantee of the governments of the Caribbean, who are the funders of UWI. So that to me are the four important legs of the agreement. So I now go on to the brand. In addition to the four legs mentioned above, the concession agreement guarantees us a dominant position in student housing on the Mona campus, in that apart from the approximately 2,500 rooms, we have the right of first refusal in constructing new units to meet future demands on the Mona campus. So as the campus grows in the next 50 odd years, we will grow with it. The other point is that we are the only brand in the Caribbean, and more than likely will remain so for the next large campus, which could pose a threat, is in Trinidad. But the issue with Trinidad is that the campus is in Port of Spain, and the majority of students come from Port of Spain. So there's very little reason for them to remain, for them to go on campus. In addition, Trinidad is significantly local students. We also see that those islands with a large concentration of foreign students, such as St. Kitts and Grenada, they pose issues, primarily political, but they are not insurmountable. And we at Once will continue to examine the expansion of our brand in those countries. Outside the Caribbean, we see many opportunities, but with our rate of return of 15% real, that presents a hurdle because it's extremely difficult to get that type of rate outside of Mona. Our brand at UWI continue to be based on the following principles: providing a safe, secure, home-from-home environment where our security and housekeeping staff, this is another important point, both categories are employed by Once Rate on a full-time basis. So therefore we have a stable workforce who are trained to alert us of issues with students. You have to appreciate that a lot of students, first-year students, are 17, 18-year-old kids who have not, this is our first time leaving home, living by themselves. Mommy and daddy are terrified that their children have left or their child has left home. So with our housekeeping and security staff, we get to know all our residents and we can keep a tab, an eye out for them. With the resumption of face-to-face classes in the past few weeks, we find ourselves now at approximately 90%. Students will continue to arrive on campus until the last week in September. So our budget of near full occupancy is pretty much guaranteed. So we are pretty much back to where we were pre-pandemic. The final point I would like to make is that our brand is largely or is widely held by pension funds. These pension funds are looking for consistent, above average yield. We are well placed to venture into other concession, we're well placed to venture into other areas using the concession agreement as our base. These areas can be what we refer to as user pay, such as student housing, where literally the user pays, or we can go into availability pay, where the government will pay us directly to provide services for hospitals, prisons, schools. The possibility for 138 is extremely endless, because these areas that I've just mentioned, such as hospitals, prisons, and schools, are untapped in the Jamaican market in terms of the private sector stepping in. So that's the end of my presentation. Ladies and gentlemen, thank you for your patience. Back to you, Ryan.
Thank you, thank you, thank you, John. I think it was quite comprehensive what you would have mentioned. One of the takeaways is in the context now globally with the rising interest rates, one of the things that's become paramount is the return of capital, not just the return on capital. You know, many times persons can find themselves chasing yields, and the problem with that is you end up chasing defaults or actually catching defaults in the end. So when you have instruments or securities that do offer that relative assurance, those tend to attract a premium at some point along the way. What it seems to us is that 138 being a provider at this time of student accommodation does provide that assurance, because one thing we can be sure of, kids will go to school and get an education, and that doesn't seem to be changing anytime soon. So with that said, I'm now going to invite Mr. Ian Prasad, Chairman, to come and speak a bit about the future of 138. Please make him welcome.
Thank you, Ryan.
Welcome, sir.
Morning, everyone. Good to see everyone here, and welcome to everyone online. You know, I'm accustomed to coming into this room and eating, you know, on a Sunday. But this is a different setting, and first of all, congratulations to the 138 team and the PR team. I think the place looks really good. Ryan and the GK team, recognize you folks as well. We have a couple of directors who are here with us in person, Marinette Lee and Donald Scarlett. I want to tell you folks that you have a hard-working board, and you know their presence here today is somewhat of a testimony to that. Just in terms of talking a little bit about the future, I'm mainly going to talk about growth prospects, and then a little bit in terms of efficiency and dividends. So first, in terms of growth, we're looking at, in our core business, student housing. There are some opportunities that are in front of us, some that are immediate and some that are going to evolve over the next 5 years or so. As far as immediate, we have an opportunity, I would say, over the next 12 to 18 months to bring online another 144 rooms at the UWI campus. I keep pressuring Cranston in us. Cranston, come, we need to be talking to the contractors and all the folks that we need to get the contracts together so that we can get the ball rolling, because I know our investing public, they're going to like this APO, we're going to get the funding, and of course some of the funding is earmarked to growth of the company. But Cranston said, boss, I'm busy with the APO. So I said, all right, I understand, but I can tell you that is something that we're going to be pushing on in very short order. In addition to that, and John mentioned a few of them, we do have some other opportunities in Jamaica. I think the folks who pay attention to what's happening in terms of universities, development in Jamaica, there seem to be quite a momentum that's coming. That is going to continue to drive some opportunities, and I know we're looking at some of those actively. And John has also mentioned about overseas. I know we've been actively looking at least one opportunity overseas, and I expect that as we kind of more settle into not only fully building out UWI and what's happening here in Jamaica, that we are going to be looking a little bit more in the overseas market as far as student housing opportunities are concerned. So I would guesstimate that maybe over the next 5 years, just in our core business, we could be looking at a top line growth anywhere from, I would say, a low of 25% to as high as 50%, just in terms of student housing. In addition to student housing, we are exploring, we're at the early stages, and I won't be able to speak too much on it, but we are exploring another PPP arrangement, which I would say again, in the next 5 years, we could actually see close to a doubling of the company in terms of top line growth for 138. It is something that we're excited about, but we know that these things, it's a process. It's not something that happens overnight. We probably are in it, I would say maybe about a year, Marinette, that we've been working on it, 2 years. So, you know, it's something that takes time, but we're on it. And, you know, if it comes through, it could be a really significant play for 138. The point I'm making is that, you know, we're looking at growth opportunities organically in terms of student housing, but strategically as well. We have our eyes open in areas that we understand PPP type arrangements that could be significant for 138. We are looking at those opportunities as well. So I would say the future for 138 is very exciting, and I'm certainly excited about it. In terms of the second pillar, I'm not going to speak too much on it because I know Douglas and Ryan and the team will you know, beat that drum a little harder. But the fact of the matter is that the play for 138 is to be efficient and to be able to pay good dividends to our shareholders. We have to be efficient. The operations have to be efficient, and there is a focus with the management that we have to be very efficient. That efficiency will drop to the bottom line. Dropping to the bottom line will allow us to pay more and consistent dividends. We are projecting that we should certainly be in the top 5 of dividend yielding stocks listed on the stock exchange. And that is something I want to say that we're going to be very focused on making a reality for all of our investors. Just going to close by saying, you know, when you come to the market and you ask folks to, you know, invest funds in your enterprise, what we're really saying to potential investors is to trust us. You can trust me, you can trust our board, and you can trust our management that we will be good stewards of the funds, that we will have the right kind of governance practices in the company, and that we will certainly work hard to fulfill the promises that we're making. So I'd want to thank everybody for their interest, and happy to take the questions later when they come. Ryan?
Thank you. Thank you. Thank you, Ian. I took note of the expected revenue growth, 25 to 50%. And I also took note of the other ventures, but as was stated, that's for another time. Cranston, Mr. CEO, your time at the microphone to tell us about the business as it is right now and the wonderful work that's been done. Hand over to you.
Morning, everyone. Welcome. It's indeed a pleasure to have you all. A number of the introductions were previously done, but I would just like to recognize those members of my management team who are here present. We have Seymour Millen, and Seymour is the head of finance. Cheryl Clark, our human resource manager. And we also have Ms. Carol McCormack. She is the head of PR and marketing. I want to thank them very much. We have a very strong management team. We also have the head of operations, Mr. Adrian Brown. He's inadvertently absent, but I'm sure he's here. All right, thanks, Adrian. Sorry, I missed you earlier. Welcome. So all the management team is here to show the strength that we have behind this company and the people behind it, and to give those who are here and physically present also an opportunity to interact with them. Peter and John would have laid the foundation as to how it all began and where we are heading as a company. And it's very important that we understand, and I want to put it in perspective, that 138 is a very strong company, very sound, very well managed at the leadership level management and at the board level. And Ian would have spoken about efficiency. And I think that has been one of the pillars that has really strengthened the organization and has taken us also through the COVID-19 period, which was a very, very tough period for us. And, but we have survived it. And that is because of good, astute management and leadership, and also the support that we have received from our financiers and investors and your shareholders. So it is important that we understand that the future for us is very, very solid based on the plans that we have going forward. We do have a very captive market. It's a niche market that we operate in. And, you know, accordingly, we expect that our revenue, you know, is maybe less correlated with the downturn in the economy. But we have a very strong pillar of the 90% concession agreement with the university, and I think this is the bedrock on which the organization is built. And so, with that guarantee, we're basically almost guaranteeing, you know, 90% of revenues. But with that said, we understand that as a company, there's more to it than that. We have to also look at our top-line revenue and driving efficiency throughout the company to land at what we consider reasonable profitability that we can return to our investors. John would have spoken about the foreign exchange risk earlier, and ours is one that, as he would have indicated, we have the opportunity based on the concession agreement to make adjustment in our fees that we charge to manage the risk against the inadvertent movements in the and fluctuations in the foreign exchange. So that for us is very important also. Thank you. We operate 4 halls at the University of the West Indies, the Irving Hall and the Georgia Lane Halls, which fall under our 138 SL Restoration Limited. And we also operate the Leslie Robinson Hall and the Georgia Lane Hall, which falls under the student living side. So invariably, we are a group of companies with a 100% wholly owned subsidiary. We have an additional capacity to add an additional 842 rooms outside of these halls. We do have the build-out capacity that we have at the Leslie Robinson Hall and still at the Irving Hall. And so Ian would have spoken about our opportunities that we have locally existing under the present concession agreements. With the demands that we are currently seeing coming out of COVID-19 and the upcoming academic year, we recognize that we have to look very keenly now at how we're going to satisfy that demand. So opportunities do exist immediately for us to build out. And of course, we are exploring at a board and leadership level these opportunities so that we can grow the company in a very, very sustained way. I don't want to leave behind our short-term rental, because short-term rental has continued to provide for us a good stream of income. Somewhere about 8 to 10% of our revenues are derived from short-term, the short-term business. And therein lies opportunities for us, because we have also developed our competencies in these areas. We are patronized by various groups, various sporting groups, and other groups coming through the university itself, church groups, and many other groups. We recognize that the group market is kind of a niche market. You know, it's one that we have tapped into, and I believe we will continue to generate revenues for the business in these areas that can also drive profits to our bottom line. In looking at our 2 concession agreements that we operate, the student living concession agreement is a 30-year agreement, and that 30-year agreement gives us the opportunity to extend for another 30 years. You know, I think Ian would have spoken about the IRR, and John, and this gives us the opportunity to extend that concession agreement if we have not yet met the 15% IRR that exists. And so the ability there for an extension does exist, and the continued operation of the company under that concession agreement. Our occupancy guarantee, again, as I indicated, is very strong and is the bedrock under which the company has been built, and which we think that investors find very attractive for us. Under the 138 restoration agreement, this is a 25-year agreement, and we have the opportunity also to expand that, extend that for another 5 years to be 30 years. So I just wanted to put the concession agreement in perspective so that we understand how it operates. And John would have spoken further about that. Ian spoke about our growth opportunities. This here that we're seeing on the slide is the unbuilt section that we have at the Leslie Robinson Hall. And this has the capacity for another 144 rooms. You can see that the steels are already out of the ground, and it is our intention to begin to explore this opportunity in the very, very near future based on the demands that we are expecting. And this will add at least another 10% room capacity to the existing capacity that we have. Of course, this in itself will not satisfy the demand that we are seeing. We also have strong demand from our nearby university, the University of Technology. And many of the University of Technology students have been patronizing us. Last year, we housed in excess of maybe 125 of them. This year alone, we are seeing a lot of applications from them, maybe in excess of 200. So there's a huge opportunity there for us. And of course, there are opportunities which exist, sorry about that, there are opportunities which exist in other local universities here on the island, which of course, one or two of them we are exploring. And I can't also reemphasize the fact that there are regional opportunities that are presenting themselves. And so we see this as, the 138 of the future, another 5 or so years, will not necessarily be what we are seeing today, because we're operating in a niche market with varied opportunities, and we also recognize that we need to move forward and press forward to satisfy these opportunities in a real meaningful way and to grow the company beyond what exists now. I want to thank you very much and hand back to Ryan, who will take us forward.
Thank you. Thank you. Thank you. Thank you, Cranston. I think the only thing I can add to that is, 2014, 138 went public, and Mariner, to believe revenues would have been zero as a startup, right? So we're seeing a startup that's gone from literally zero to 1.4, 1.2 billion revenues, and a net profit margin of 27%, which by any measure is a leading margin of that nature, of that kind on the Jamaica Stock Exchange, and pretty sure up there in the world as well. And we're talking about in a real sense, because with the rent pegged to the US dollar, more or less you can remove devaluation from that equation. So we are talking about a business that can literally stand on its own 2 feet and has continued to do so. And what we're doing at this stage is inviting investors to participate in a more meaningful way. With that said, and the person who's going to speak to those numbers is to my right, that's Douglas, our VP of Investment Banking. So Douglas, the floor is yours, sir.
Thank you, Ryan, and thank you everybody that has both come here and is also viewing online. To be honest, I feel like I don't really have to say much. We've heard quite a lot from the chairman, from the CEO, from our moderator himself about why this is such a great business. And I think it's fairly obvious. And the point that you just made a while ago, Ryan, about from 2014, this business started from zero, and now we're looking at a business that earns around $1.3 billion in sales with the growth opportunities that we're talking about. This really is an amazing story of what entrepreneurship can bring, and also what the stock exchange can help to foster. So quickly, my job here is to just tell you about the IPO. And we have some numbers, some information here that I really should raise with you before we get into the nitty-gritty. One is, of course, that we are looking to raise somewhere between, and I'm going to use round numbers here, you can see the specifics on the screen, somewhere between 2.2 billion to 3.2 billion, right? We have the ability to upsize from 2.2 to 3.2. And something that's important to us is how we've actually structured this transaction. There have been many questions that we've been asked over the time as to why an APO, why not a rights issue, or why would you go with a rights issue versus an APO? And what we've tried to do here with this APO is to structure it in a way that you really get the best of both worlds. So with an APO, we are able to offer not just to existing shareholders, but to everyone, to the general public, an opportunity to invest in this business. But what we've also done is we've carved out a reserved pool, and you can see it even has a special price of $4.05 for people like existing shareholders. So we have a reserved pool of roughly 60% of the offer that is for the existing shareholders. They have their special pool that they can invest in, a special price that they can invest at, so that they can reap the benefits of their trust in the business to date. And something that has been mentioned before, this transaction is really going to be transformative. And we'll talk a little bit more about the details later, but we are going to be able to transform this business from what it is today into a cash-paying business, a business which it has started. It paid a dividend recently, but it will be able to, coming out of this transaction, really ready itself for two big things. One, it's going to restructure its capital base so it can return more capital to the business. Why pay the banks when you can pay your shareholders? That just makes a lot more sense to me. And the other thing is to position itself for the growth that Cranston has been talking about. So just quickly to talk about where the business has been for the last few years from a financial perspective. And I just want to highlight a couple of things. Firstly, revenue. And you can see here that generally that is a growing trend. That's a growing number. We've gone from $781 million in 2018 to just under $1.2 million in 2022. And also just to note that these are annual revenue figures, and the company's year end is as at September. So this 2022 we're talking about is as at September 2022. So almost a year ago, actually. And things have changed since then. We'll talk about that as well. But a question that I know I would ask if I saw this graph is, hang on, what happened in 2021? Why is it a little bit lower? And that's actually, I love the answer to that question, because the answer to that question really shows the resilience of this business and the acumen that the people behind the business have had, which is that 2021, I imagine everybody can guess, COVID hit, right? And during the really height of COVID, nobody was going to school. Everybody was staying at home, doing school from home or whatever was happening. So the halls were fairly empty. And what that should mean is that that number should be zero. But because of the way that the contract is constructed, that 90% guarantee allowed the business to continue to not only earn a significant amount of revenue, $800 million is nothing to scoff at, but to also earn profit. Because if you look at the net profit graph on the right, you can see that in that year, they made over $200 million in profit. So this contract really, the way that it's been structured, the way this business operates, significantly mitigates risk. And let's talk a little bit about the profit, because the other question about that graph is what happened in 2018 and 2019? Why are they so low? In 2018, there's a minor loss, about $16 million. In 2020, moved up to closer to $20 million worth of profit. And the answer is that the way this business is run, the way this business makes sense is a scale business. It needs to be operating at scale. And in 2018, they were only running 3 out of the 4 halls that are in the business model that Cranston spoke about earlier. And so really 2019 was the first year with the 4 halls, and so it takes a little bit of time to ramp up, and that's when you can see 2020 really hits to what you can almost consider normalized earnings, right? And you can see that since then, that profit has grown. And something that's important to also say to really support Cranston's point about the growth capacity that this company has is that right now, the occupancy rate, so the amount of rooms and beds that are being filled by students, is well above 90%. At this point, 138SL is literally turning people away because they don't have any space. So that's another thing that is really going to drive the future of this business. Just to quickly talk about the balance sheet, as you can see here, it's actually quite a simple balance sheet. And generally, the balance sheet has been moving in a positive direction from a shareholders' equity perspective. Why? Because of the profits that have been generated and retention of those profits. And something to point out here, and the truth is, it's not really this number I should be looking at, it's the June number that we'll be talking about soon, but shareholders' equity right now is $4.5 billion as at the end of September 2022. We're talking about a transaction that will result in an equity injection of somewhere between roughly $2 and $3 billion. So you can imagine where the net value of that balance sheet will be after this transaction. It will be that figure plus that injection. So we're talking about really boosting the capital base of this business so that it is able to do all of the things that we've been talking about. Pay more, distribute more capital to shareholders, and really put itself in a good position to add those 144 rooms and even more in the near future. Again, just to quickly talk about what's happened in the last 9 months, and growth is the key driver here. We see here that for the 9 months to June 2023, revenues grew from $900 million last year to over $1 billion. Right? And equally, profit has the same trend, where it went from $240 to $270 million just for 9 months. So you can imagine what the rest of the year will look like. This business is already on a growth path, and what we're doing with this transaction is to help it just supercharge that growth a little bit more. And quickly, again, the same trend on the balance sheet side. You can see that shareholders' equity continues to grow thanks to retention of profits, and that point that I made about the size of the balance sheet still stands here, except we can use 4.7 as the base rather than 4.5. So just to speak a little bit about the deleveraging strategy, which the majority of the funds are being earmarked for. What this business is going to do is to reduce its debt so that it has a much stronger capital base, and it's really able to, again, provide more capital to its shareholders. And as I look at these graphs, I remember the first time I saw it, I said, but what's the difference? They look exactly the same. But the important point, the important difference is really, if you look at, for those of us mathematically inclined, that y-axis, those numbers on the left-hand side, that is really the important thing. If you look at the top graph, that top number is $4 billion. If you look at the bottom graph, that top number is $1.8 billion. So what this is saying, even though it doesn't look that different, but what this is saying is that this transaction will effectively have 138SL's debt obligations. It will allow it to breathe a lot more in terms of cash flow, because right now you can see how much money they're paying in interest and principal. They're paying almost $1 billion, $730 million in principal and interest. And what this transaction is expected to do is to save them somewhere between $270 million and $470 million in straight up cash. That is cash flow that will literally go to the company's bank account, and Cranston will now have the difficult decision to make as to what to do with those funds. Will he pay them to his shareholders? Yes, he will. But how much of it will he retain so that he can construct those 144 rooms? So that is really what this transaction will do for this business. Just quickly, something to identify, another benefit of what is going to happen here from this APO. If you notice, there's a lot of the company that's owned by institutions, right? Owned by folks that are long-term investors that don't really trade so often. So you'll see that there's not a whole lot of trading in the market generally. This is expected to change that. We are going from just over 400 million shares to at least, and this is at least because this is the case where, the base case, not in the upsize case, at least 924 million shares. So we're going to at least double the amount of shares that are on the market, which means that you're going to have a wider shareholder base. You're going to have more shares that are available to be traded, and you're going to have a readier market and a lot more activity on the stock exchange with this business. Something that we've spoken about before, but just to actually quantify it, is what actually does this mean in terms of the returns to you in your pocket. And based on the savings that are projected here, we are projecting, based on the prices, the APO prices, a dividend yield of somewhere between 8.3 and 10.2%. That is significant. That would be one of the highest dividend yield stocks, as you can see here, definitely in the real estate market, right? The average real estate sector dividend yield is at around 3%, and even the highest dividend yield currently, which is CPFV, that is the Epley property fund, is 5%. 5% is, I think, if my math is correct, definitely much less than 8 to 10. So we really are bringing this business into its next phase of returning capital to its shareholders. And I mean, I don't even have to just look at the real estate market. If you look at the market in general, all of the stocks combined, if you find that average, it's still around 3%. And so this is really going to be a transformative transaction for the business. And so here we kind of, something we wanted to do and to show the attractiveness of the offer, why this is such a good investment for shareholders, is, again, we can kind of quantify the specifics around that range that we spoke about, that 8 to 10%. But something that is interesting, a little mathematical exercise that we can do is, let us just assume we are projecting this dividend payout. What level of pricing would be required to bring the projected dividend yield of 138 SL to the market average yield of 3.24? And as you can see here, those prices are quite high, somewhere between $11 and $12. Now, I don't have a crystal ball. I'm not telling you where the price could or could not go. I'm just saying that what that shows is that this business is on the verge of paying significant capital to its shareholders, providing significant value to its shareholders, and that is something that is really should be valued by us and by the market. And speaking of the value of dividends, what are the value of dividends? It's, first of all, you preserve capital because you no longer have to depend on things like capital gains. Whether or not the stock goes up or down, you know that you can count on a regular payment of cash in your pocket to do whatever you want to do with it, right? Hopefully reinvest in 138. It also tends, and now we have to, as brokers and security dealers, take out our textbooks and talk to general principles. It generally takes out one, the downside risk, and two, it creates like a floor usually, right? Where because you have this dividend, people are going to say, hey, whether it is benchmarking it versus some other dividend yields, benchmark it versus some other fixed income yields, or just having the demand for it because you'd like some cash flow. It tends to provide a relative amount of stability in terms of pricing and a fairly strong floor, a fairly strong low point, below which stocks tend not to drop. And finally, let's talk about valuations. Let's talk about how cheap or how expensive this offer is. And what we've done here is we've actually looked at a few things. But we've really looked at the metrics that our market tends to think about, which is price to earnings and price to book value. And we've also made sure to, just as a benchmark, see what does the rest of the real estate sector look like. And based on our pricing that we have here, the $4.05 to the $4.40, depending on which pool we're talking about, and also depending on whether there is an upside or not, you can see that the price to earnings of this offer is somewhere between around 9.3 to 11 times. And if you look at the average PEs on the real estate market, that average is around 16 times. So again, pulling out my geometry set, my ruler, whatever we need to figure it out, 10 to 11 or 9 to 11 is definitely less than 16, right? So this opportunity is priced below the average real estate sector price to earnings. And we really think that this is a significant value to shareholders, because if you look at it from the other side, price to book, essentially what we, and I don't know how we convinced them, what we convinced Cranston to do was to sell his business at somewhere between, it says, 0.54 to 0.65 times book. So somewhere between 54% and 65% of his book value, of his total shareholders' equity. Essentially, we're telling Cranston to take a loss so that you guys can get a good price, right? And so this really is an extremely good value for investment money. And just to sum up, finally, with the details of the offer. And we've gone through some of these already, but just to quickly say that again, this raise, we are looking to raise somewhere between $2.2 and $3.2 billion, depending on whether there's an upside. As you can see here, we have a reserve pool of just over 300 million shares, which represents around 60% of the offer. So this is not a small reserve pool. We've said to the shareholders of the business and the people that can apply to the reserve pool are existing shareholders, 138 SL staff members, and certain key strategic partners. So really and truly, we have created a significant pool. 60% of the offer is earmarked for these individuals, which includes a big chunk of that is going to be shareholders. We want to remember our shareholders and provide them with additional value. And you can see that the reserve pool price is at $4.05 and the general pool price is $4.40. Our opening date is September 8th, this Friday, as in tomorrow. And our closing date is October 6th, but as you know, the company reserves the right to close early if it requires. And finally, just to say, how can you apply? And how you can apply are two ways. One is you can come to us at GK Capital and use our online portal at gk1wealth.com. The other is through our selling agents, JN Fund Managers, and you can find their system at bloomjnfm.com. And with that, I will close and thank you all for participating and hand back over to Ryan.
Thank you. Thank you. Thank you, Douglas. The numbers paint a compelling picture and really speak for themselves. You know, price to book of under 50%. Book value actually is above $10 if we look at shareholders' equity of, I think, 4.7 billion and the 414 million shares in issue. So we don't really need to speak any further on that, and the PE in the range of $5 or 5 times or less. With that said, however, we want to open the floor for any questions. I don't know if we'll be able to access questions online. If we can, okay, so we can access questions online. But if there are any questions here, we'll be happy to take them. And we have the persons ready and able to address any query you may have. So open the floor for questions. We'll give preeminence to those who are here physically first, and then take it from there. Any questions? We have a microphone that's roving as well. It's in the microphone is. Any questions?
Hi, good morning.
Morning.
Theon Sims here. Just one question. In terms of the revenues that have been generated from 138SL, can you guys speak to the percentage that has come from short-term rentals?
About 11%. Canton, 11%. 11%. It's grown, I think, 53% over the last year. And it seems that trajectory is likely to continue. All right. A question though, Cranston, is short-term rentals a greater percentage contributor to revenues during the off-season, so to speak?
Yes, that's correct. It's a greater contributor during the summer. It peaks during the summer. But what you find on a month-by-month basis is that it's more consistent. So during the summer is when a lot of the sporting activities also take place and the groups. So you'll find that it goes up some more.
But it's more recurrent, it's becoming more recurrent now.
Yes.
Okay. Thank you. Any? Any other questions? Nothing online? All right. Well, it seems that short of there being any,
Straightforward.
yeah, I think so. I think short of there being any other questions, we'll be at an end. So I want to thank everyone for coming out on a Thursday morning. We know how difficult it can be, especially back to school and all of that. We hope that the trust today was edifying. You know how to apply. And there have been other methods of applying within the prospectus to your broker of choice. That's another mechanism. But we look forward to making this a successful offering. We open tomorrow and close October 6th. We're available at GK Capital for any questions you may have. You can reach the 138SL team, but call us. They're busy. They're busy people. We're busy too, but they're busy. And then you have JN, who's also able to assist with the queries. I want to thank you all for a great time this morning. I wish you well. I see refreshments at the back. So we'll be in touch. Thank you.
Welcome to 138 Student Living, your safe home away from home, located on the UWI Mona campus with over 1,400 rooms. Our state-of-the-art 24-hour secure gated community is designed for comfort, convenience, and peace of mind. At 138, we help make your academic dreams a reality. Visit our website, 138studentliving.com. 138 Student Living. Experience our community. Welcome to 138 Student Living, your safe home away from home, located on the UWI Mona campus with over 1,400 rooms. Our state-of-the-art 24-hour secure gated community is designed for comfort, convenience, and peace of mind. At 138, we help make your academic dreams a reality. Visit our website, 138studentliving.com. 138 Student Living. Experience our community.